Imagine a giant swimming pool bustling with activity. People are buying and selling, prices are going up and down. This is the stock market. It's where companies go to raise money by selling small pieces of ownership called stocks. These stocks, or shares, represent a tiny slice of a company. When you buy a share, you become a part owner, even if it's a very small part. Think of it like buying a brick in a giant Lego castle. You own a piece, and its value can go up or down. Why do companies do this? They need money to grow. They use the money from selling shares to build factories, hire people, or develop new products. In return, investors hope to earn money as the company succeeds. So the stock market is a marketplace connecting businesses that need money with people who want to invest. It's a fascinating world with the potential for growth and, yes, some risks too. But don't worry, we'll navigate those waters together. Subscribe to our channel and hit the notification bell to stay updated with our latest videos on mastering the stock market. Before we dive into the action, let's learn some basic stock market lingo. Imagine walking into that bustling stock market pool. You'll need to understand the conversations. Stocks. Remember those pieces of companies we talked about? Those are stocks. They're like little slices of ownership. Shares. Another word for stocks. It's just like saying slices instead of pieces of pizza. Brokers. Think of them as your swim coaches for the stock market. They're the ones who help you buy and sell stocks. You can open an account with a brokerage firm online or through a financial advisor. Stock exchange. This is the actual pool where the buying and selling happen. The New York Stock Exchange, NYSE, and the NASDAQ are two famous examples. They're like giant trading floors, but nowadays most trading happens online. Understanding these basic terms will help you feel more comfortable navigating the stock market waters. Ready to learn more? Let's jump into how buying and selling actually works. Now that you know the basics, let's talk about how to actually buy and sell stocks. It's easier than you might think. First, you'll need to open an account with a brokerage firm. It's like getting your pool pass. Once your account is set up, you can start browsing stocks. You can search for companies you know or use every day. When you find a stock you like, you can place an order to buy it through your broker. You'll specify how many shares you want and what price you're willing to pay. If someone else is selling at that price, your order will be filled and you'll own those shares. Selling is similar. You tell your broker which stock you want to sell, how many shares, and your asking price. When a buyer matches your price, the trade is executed and you'll receive the money. Remember, stock prices constantly fluctuate based on supply and demand. It's like the water level in our pool, always moving up and down. Don't worry, we'll talk more about managing those fluctuations in the next section. Jumping headfirst into anything new can be scary, and the stock market is no different. Here are some tips for dipping your toes into investing. Start small. You don't need a fortune to begin investing. Begin with a small amount that you're comfortable with, even if it's just a few $100s. Think long-term. The stock market is like a marathon, not a sprint. Don't expect to get rich quick. Instead, focus on long-term growth and be patient. Diversify your portfolio. Don't put all your eggs in one basket. Spread your investments across different companies, industries, and even asset classes. It's like having different floaties in the pool, just in case one springs a leak. Invest in what you know. Look for companies that make products or offer services you understand and believe in. If you love a company's products, chances are others do too. Remember, investing always involves some risk, but by starting small, thinking long-term, and diversifying your investments, you can minimize those risks and set yourself up for success in the stock market pool. Even the calmest pool can have some waves. In the stock market, those waves are called volatility. Stock prices go up and down, sometimes dramatically, but don't let those waves scare you away. Understanding and managing risk is crucial for any investor. Here are some key strategies. 1. Don't panic sell. When the market takes a dip, it's tempting to sell everything and cut your losses. But remember, you only lose money if you sell at a loss. Ride out the waves and think long term. 2. Set stop-loss orders. These are like safety buoys in the stock market. They automatically sell your stock if it drops to a certain price, limiting your potential losses. 3. Diversify, diversify, diversify. We've said it before, and we'll say it again. Spreading your investments across different assets is like having multiple floaties. It provides a safety net if one investment takes a dive. Remember, investing in the stock market always involves some level of risk. But by understanding those risks and taking steps to mitigate them, you can navigate the ups and downs with confidence. Before jumping into any pool, it's wise to check the depth and temperature. The same goes for the stock market. Thorough research is essential before investing in any company. 1. Read company reports. These reports provide a wealth of information about a company's financials, management team, and future plans. You can find them on the company's website or through financial websites like Yahoo Finance or Google Finance. 2. Follow financial news. Stay updated on market trends, economic indicators, and company-specific news. Reputable financial websites and publications are your best bet. 3. Analyze industry trends. Understanding the overall health and direction of a company's industry is crucial. Are they in a growing market or a shrinking one? 4. Consider company valuation. Is the company's stock price justified by its earnings and growth prospects? There are many online resources and tools to help you determine this. Remember, knowledge is power in the stock market. By doing your homework and understanding the companies you're investing in, you'll be better equipped to make informed decisions. The stock market is like a vast ocean, constantly moving and changing. To navigate it successfully, you need to stay informed about the currents and tides. 1. Monitor your investments. Don't just set it and forget it. Regularly review your portfolio's performance and make adjustments as needed. 2. Stay updated on market trends. Economic indicators, interest rate changes, and geopolitical events can all impact the stock market. Stay informed through reputable financial news sources. 3. Be mindful of your risk tolerance. As your life circumstances change, so might your risk appetite. Regularly reassess your investment strategy to ensure it aligns with your financial goals and comfort level. 4. Seek professional advice. If you're ever unsure about an investment or need help developing a financial plan, don't hesitate to consult with a qualified financial advisor. Remember, staying informed is an ongoing process. By making it a habit to stay updated on market trends and your own investments, you'll be better equipped to navigate the ever-changing waters of the stock market. Congratulations on taking the plunge into the world of stock market investing. Remember these key tips to navigate the waters with confidence. 1. Start small, think long-term. Begin with an amount you're comfortable with and focus on long-term growth, not quick profits. 2. Diversify your investments. Don't put all your eggs in one basket. Spread your risk by investing in a variety of companies, industries, and asset classes. 3. Do your research. Thoroughly research any company before investing. Understand their financials, management team, and industry outlook. 4. Manage your risk. Use tools like stop-loss orders and diversification to protect your investments from market volatility. 5. Stay informed. Continuously monitor your investments and stay updated on market trends and news. The stock market can be a rewarding place to grow your wealth, but it's essential to approach it with knowledge, patience, and a healthy dose of caution. Remember, the most important investment you can make is in yourself.